Did you know that the top dividend-paying stocks have outperformed the broader market by over 2% annually in the last 50 years? If you're not investing in dividend stocks, you might be leaving money on the table. What's the secret to making money with them? Let's uncover it together. Dividend stocks are a cornerstone of passive income and long-term wealth building. But investing in them isn't just about picking high-yield stocks and hoping for the best. Today, we'll break down the strategies used by seasoned investors to generate consistent income and grow their wealth through dividend stocks. Whether you're new to investing or looking to refine your portfolio, this video is for you. Challenge: dividend investing sounds simple, buy stocks that pay dividends and collect income. But it's not always that straightforward. Many new investors chase high yields without understanding the risks. They buy into companies with unsustainable payouts or falling revenues, which can lead to capital losses. Others don't diversify enough, making them overly reliant on one sector or stock. These challenges make it crucial to know the right approach. Development. 1. What are dividend stocks? Dividend stocks are shares of companies that pay out a portion of their profits to shareholders regularly. These payouts are usually quarterly and can be a reliable source of income. But what makes dividend stocks so attractive? Income generation. They provide regular cash flow, making them ideal for retirees or those looking for passive income. Potential for growth. Many dividend-paying companies are well-established, stable businesses with a history of growth. Reinvestment opportunities. Reinvesting dividends can lead to compounding, where your earnings generate even more income over time. 2. Types of dividend stocks. Understanding the different categories of dividend stocks is crucial. High-yield dividend stocks. These offer higher-than-average dividend yields but often come with greater risk. Examples include certain REITs, real estate investment trusts, or energy companies. Dividend aristocrats. These are companies that have increased their dividends for at least 25 consecutive years. Examples include Coca-Cola, Johnson & Johnson, and Procter & Gamble. Growth-oriented dividend stocks. These have a lower yield but consistently grow their payouts, such as Apple and Microsoft. 3. Key metrics to evaluate dividend stocks. Investing in dividend stocks requires evaluating specific metrics to determine their quality and sustainability. Let's break these down. Dividend yield. This is the annual dividend payment divided by the stock price. While a high yield may seem appealing, yields above 6 to 7% can be a red flag for financial instability. Example: ATT offers a high yield but has faced questions about its ability to sustain payouts. Payout ratio. This measures the percentage of earnings paid as dividends. A payout ratio above 70 to 80% might indicate the company is stretching its finances. Rule of thumb: look for a payout ratio under 60% for stability. Dividend growth rate. Companies that consistently increase their dividends signal strong financial health. Example: Microsoft has grown its dividend by 10% annually over the last decade. Free cash flow. This is the cash a company generates after accounting for capital expenditures. It's a critical indicator of whether a company can sustain its dividend payments. Debt levels. High debt can jeopardize dividend payments, especially during economic downturns. Look for companies with manageable debt-to-equity ratios. 4. Building a diversified dividend portfolio. Diversification minimizes risk and ensures steady income. Here's how to do it. Invest across sectors. Spread your investments across industries like utilities, healthcare, consumer staples, and technology. Example: combining stable utility stocks like NextEra Energy with growth-oriented tech stocks like Apple. Blend yields and growth. Balance high-yield stocks with lower yield, high-growth options. Example: pairing high-yield REITs with dividend aristocrats. Consider global exposure. International dividend stocks can provide additional diversification and exposure to growing markets. 5. The secret to making money: reinvestment and compounding. The true magic of dividend investing lies in reinvesting dividends. By using your dividend income to buy more shares, you harness the power of compounding. Example: a $10,000 investment in a stock with a 4% annual yield, reinvested over 20 years at an 8% annual return, can grow to over $50,000. 6. Tax implications of dividend investing. Dividend income is taxed differently depending on its classification. Qualified dividends, taxed at the long-term capital gains rate, 0%, 15%, or 20%. Ordinary dividends, taxed as regular income. Tip: use tax-advantaged accounts like IRAs or 401(k)s to minimize tax liabilities. 7. Common mistakes to avoid. Chasing high yields. Avoid investing solely in high-yield stocks without assessing their fundamentals. Neglecting research. Always analyze a company's financial health and payout sustainability. Overconcentration. Don't put too much weight on one stock or sector. Ignoring fees. High brokerage or fund fees can eat into your returns. 8. Advanced strategies for dividend investors. Dividend ETFs and funds. Simplify investing by choosing funds like the Vanguard High Dividend Yield ETF, VYM. Covered call strategies. Enhance income by selling call options on dividend stocks. Dividend reinvestment plans. DRIPs automatically reinvest dividends to buy more shares without incurring Trading fees. Monitoring and rebalancing. Regularly review your portfolio to ensure it aligns with your goals and risk tolerance. Here's the ultimate secret: consistency and patience are your greatest allies. By focusing on quality stocks, reinvesting dividends, and maintaining a diversified portfolio, you'll set yourself up for long-term success. Remember, dividend investing isn't about getting rich overnight, it's about building steady wealth over time. To make money with dividend stocks, focus on understanding the basics, selecting quality companies, and leveraging the power of compounding. Stay informed, avoid common pitfalls, and keep your long-term goals in mind. Share your favorite dividend stocks in the comments below and let us know your strategies for building wealth with dividends. Don't forget to check out our next video on the top dividend stocks for 2025. Subscribe and hit the bell icon to stay updated.